So we talked a bit about, in our last segment, why we should become interested in investing in Bordeaux wines as an alternative investment to the stock market. Now I want to spend a couple of minutes saying, how do I become an individual Bordeaux wine investor? Well, a couple of key things. Number one, focusing just in Bordeaux, you can not be too complicated in your approach by choosing just the 5 first growth chateaus of Bordeaux. These are great centuries-old brands that are respected around the world, always have tremendous value. That is Chateau Lafite, Rothschild, Chateau Mouton Rothschild, Chateau Latour, Chateau Margaux, and Chateau Haut-Brion. An investor could become quite successful just focusing on these 5 great brand names. I have here a Magnum, a double-sized bottle of Chateau Margaux, just as a little prop to show you what these wines look like. Now, you could venture beyond these 5 first growths as you learn a bit more about the region of Bordeaux. You'll learn that there are second and third growths that might be of investment value, especially during good vintages. Wines like Pichon Lalande, Chateau Lascombe, Las Casses, Léoville Las Casses, and even Ducru Beaucaillou. These, in good years, are of investment quality also. But the vast majority of Bordeaux wines, especially the wines you'll find in your grocery store, are not of investment grade. So you do need to stick to high quality wines. And as I said, in good vintages, some of the great vintages over the past quarter century have been 1982, 1990, 1995, and 96 were quite good. And then even more recently, there were very great vintages in year 2000, 2003, and probably especially 2005. These great vintages, the wines have much more demand around the world, therefore the supply is more constricted and the prices skyrocket. Because a chateau in Bordeaux is defined by its property line, they cannot make any more supply than what's available in a single year. So no matter what the demand is, and in good years they tend to prune even more, so you get lower production. This is why you get a skyrocketing price in great vintages. Another thing you want to focus on is your unit of purchase. Wines are sold in cases of 12 bottles in an original wooden case with a stamped seal, a logo from the chateau. So you want to use that as your unit of dealing in wines. You don't want to buy loose bottles, but just cases of 12 in their original wooden case from the chateau. This is easier to buy, easier to store, and easier to resell, because the buyer who buys from you, which you have to think about up front, is much more willing to pay top dollar for an original box of wine from the chateau. You need to develop a relationship with a merchant for both buying and selling, so that if he has sold you the wines originally, he'll be much more likely to buy them back from you, especially if you store them in his warehouse, his facility. Then he knows the wines were purchased in good condition and have been stored in good condition, so again you'll get your top dollar when you go to sell these wines. Returns you can expect over the years, as I said, in a worst case scenario you might lose 20% in a year in the valuations. In a good year they may rise by 40 or 50%. I think over a 5-year period of time you might expect to make about 15% annual returns after all of your costs. So you might want to consider one of the best things that the cliche about investing in wine is that you can drink your mistakes, something you can never do in the stock market. Thank you very much.